Hey, what's happening, everybody? This is Pete Fickeisen with a very, very, very special podcast here today for Pouring Coffee. I am joined by Mark Bossey, Boston Premier Wealth, who's the managing partner. I've got Andrew here, who's a portfolio analyst for them, and we are going to talk everything about the market here today and what is going on in regards to banking in general. There's a lot of people with a lot of questions, and hopefully we'll get a lot of answers here today. So just to kind of recap as to what's going on here, we've had a couple banks that have traded hands in the last 2 weeks. Last week was SVP, Silicon Valley Bank. So for those of you local here in Massachusetts, feeling a little bit of a pinch from that. We've had Credit Suisse that just got bailed out within the last couple of days. We have First Republic that's reeling a little bit. And I just really want to get all of our clients and all of our partners kind of up to date as to what's happening. Because, along with that, we have next week, which we have a possible Fed increase in rates, which again, for everyone that is concerned about that, that's the rate in which it's the prime rate in which basically the Fed lends banks other money, right? So really important to know that, the Fed is doing all of this to fight inflation. Inflation is like the kryptonite for mortgages, right? So inflation goes up, mortgage rates go up like we've seen, because coming out of the pandemic, there was so much money given away. People have been spending money like crazy, right? And we're going to talk today about that a little bit. Where interest rates are heading, which, by the way, they've been heading low, which has been phenomenal for our clients. We've been in a locking position for the last couple of days, which has really enhanced some savings from clients, where as of like 2 weeks ago, the bond market 10-year note was up above 4. Now we're back down at 3.4. So things are a little uneasy, but we really try to time you as from a lock perspective to get you into that savings route. And that's, what we do here at Cross Country Mortgage. We have some of the best bond analysts in the marketplace, giving all of our loan officers, up-to-date information so we can pass it on to our clients to make educated decisions. So anyways, what's up, guys? How you doing, Mark? What's going on, Andrew?
Great.
Hey, how's it going?
Thanks for having us.
All
Thanks for
right.
having us.
So yeah, I'm looking up at the ticker here. I'm watching things going nuts. So let's start with, from a marketplace standpoint, how your clients are feeling. I know my clients have been, really, really kind of uptight. We've had a lot of people, that had invested in Boston Private Bank, with their mortgage and or their assets. And, they got purchased by Silicon Valley Bank, which had some big trouble, which was turmoil in the news last week and, started actually the week before that. But let's talk a little bit about that. Like, if you were a client there, tell us kind of what happened.
Yeah, so what happened at SVB really happened. It occurred well before this year. What the bank took on was interest rate risk, and it incurred a lot of deposits. It took in a lot of deposits pre-2022. And what they did with those deposits was they invested in securities that had interest rate risk. Now, as we all know, last year rates went higher, and what happened with those securities is they were worth less. But what really wasn't foreseen by SVB was that they would need to meet depositors' demands last year in what was a high cash burn for their clientele, who were startup technology companies and venture capital firms. So you had a lot of cash burn, a lot of withdrawals going on within the bank, but they had to meet those redemptions with securities that were worth less. So they took on losses. What ended up happening is they need to raise additional capital. They need to raise an additional $2.25 billion of capital. Wow. And that spooked their depositors, and it created an old-fashioned bank run, really. And that only compounded the losses that I spoke about. So tough times for banks like SVB. And, we're seeing the ramifications come across to other banks. There's definitely some stress on their stock prices and whether they're going to be able to stay liquid.
Yeah.
But, in terms of, what the last week for us has been like in terms of our clients is we've had to put communication out and be sure that people understand that, we're going to see some volatility. These things happen within markets, uncertainty. The Federal Reserve did induce this to an extent because they were raising rates until something broke, and something broke last week. And it's an unfortunate thing because people did lose jobs and people had to scramble to pay their workers, but definitely a difficult period for everyone.
And Pete, at Boston Premier Wealth, I mean, we're an investment management firm that does comprehensive planning. The key for us and our clients is not giving in to the fear, right? And staying the course and, seeing the big picture. And I think that's important for any client, your clients as well. Just listen, these are hurdles that we have to get over, just like other hurdles we have got over and we will have to in the future. You can't make long-term decisions on short-term issues. I keep saying that to clients.
Right.
We'll get through this, and you just really can't panic. If that dream house is out there and you still want it, and rates are up a half a point, it's in the big picture, it's not the end of the world, right? Like, so, and that's a long-term family decision to live in a house for 30 years. I think everyone's getting caught up in the turmoil and the propaganda, that a lot of the news companies are casting to get ratings, and it's really not as bad usually as it appears. So just our job is to just make sure our clients understand that and they stay the course.
Yeah, I mean, people talk to us about, hey, should I buy real estate? Should I invest the money? Is this a low? Is this a high? We've been speaking to our clients about just the absolute shortage of housing out there, and that Massachusetts, has an abundance of jobs. So there was a really incredible report that came out by the Massachusetts Association of Realtors, MAR, in the last couple of weeks, where within the last 6 months, there was like 125,000 jobs created, but there was only 2,200 building starts. So, that fluctuation, is leading to a giant spike in rents, right? And then people are out there trying to buy homes and there's nothing to buy. I mean, the year over year inventory right now is at like a 25-year low. So, it's been our opinion with real estate that, again, like interest rates fluctuate, we can always refinance you. But when it comes to your money and your assets, like you shouldn't tie your mortgage to an asset ever, right? You should let a financial planner like yourselves, handle the money and let the people that handle the mortgages, right? And when you commingle the two and you're not sure who's managing or where the funds are because you got that quote unquote great interest rate, a lot of people are looking and saying, okay, well, I put in 100,000 to X bank so I could get that incredible rate of, 3.875 when the market was 5.25. Well, that's great, but where's your investment today? And I think that's like the biggest fear is that, not only could these banks fail, these mid-sized to smaller banks, right? But it's just like, you just lost 90% in some instances, and that's real talk from a client. They lost 90% of their portfolio because they got that super low interest rate, right? And
it's also about, I think people forget, it's the opportunity cost of the money that's lost. So a lot of times clients don't realize it. You might get that low rate to get that money in the bank or wherever it needs to go to get that rate, but what could you have done with that money? In this marketplace, we had a tough last year, and the beginning of this year was off to a better start, and then this happened. But there are opportunities. There are opportunities to get in at some really good valuations. So it's you have to consider the opportunity cost of that money when you make those decisions, whether you put a ton of money down on the property or you put less down and do something with the rest. That has to be factored in.
Yeah, 100%, 100%. And again, we look at cost right now when people are out there, and like when we compare interest rates with other people, we always tell people like, hey, listen, we know you're going to shop, right? We know you're going to go out there and look for the best deal. That's apparent. That's what we all think, they've been in the business for a while. But the thing is, when you look again, and I think, talking to your financial planner, talking to your accountant, talking to a third party person about what you're going to do with your mortgage is super important, because guys, let's face it, besides the assets that you manage, most people's homes is their greatest asset. I know for me, my real estate portfolio is bigger than my investment portfolio, right? When my equity in those things, long term, it was great. But, it's like, the money that you have, to me, should be separate, right? And you need to get an opinion before you make that move. So I implore you that before you make a move that's drastic, before someone gives you that super low rate, go to a pro, figure it out. Reach out to your financial planner, reach out to your CPA, reach out to another mortgage lender, figure it out. Because, when I read a headline like, Rocket Mortgage did the most mortgages in Massachusetts in 2022, I sit there and go, an online bank that charges an exorbitant amount of cost per loan, right, to get an interest rate, right? When we know we're going to refinance you down the road, like we just don't have clients paying a lot of points, right? Right? Like, why would I pay a cost right now to buy down an interest rate when we know we're going to refinance, or we have a high likelihood of refinancing, right? So, it was kind of crazy to me that people spent that extra money where they could invest it someplace else, or save for another house, or put it into their 401k, or, give it to a financial plan.
Other debt, credit cards,
right.
Or you're right, exactly.
Yeah, I mean,
for college, for retirement. It's crazy. I mean, you're right. These purchases of properties are huge amounts of money. I mean, if you do the amortization, it's huge amounts of money, and people are just, poo-pooing the decision, just trying to go for the lowest rate. And it's not always the case. It's who you go with, the professional, who backs it is important.
Yeah.
I think the servicing of it is important. All that has to be considered.
So let's talk about this. So, SVP, I think, I'm not actually even sure, maybe you guys know more than me, but, what happens to those assets? So if I had a mortgage there, obviously someone's going to probably come buy that asset. Let's forget about the investment side of it, but a lot of the calls coming into me, right, are like, hey, what happens when a bank is liquidated? Like, what happens when, I know that my, money is there. I had people literally, Mark, in line on Monday, waiting at Silicon Valley Bank, trying to get their money out. It's not funny, but it was just like, I saw videos online on Instagram and Facebook and LinkedIn where people were waiting in line to get their savings out, right? The investment money, President Biden came on Monday morning, banking system's fine, everything's good, but your checking, savings, your mortgage, everything's going to be good there, but your investment, that's your risk, right? And I think a lot of people are learning that lesson. But what happens like when somebody buys out somebody? So like if I did have an investment with, one of these banks and they got purchased, how does that work? Like what happens to that? What happens to your investment?
So what's going to happen is these banks will be bought for likely pennies on the dollar from either hedge funds, big national banks, possibly private equity firms. And that's where, the bank's assets will roll up into is these bigger entities. And you can either be serviced by those entities, or you could, just see your assets flow there, and that's where they lie. So, that's what typically happens when smaller companies become more attractive because they took on too much risk trying to become the larger company. The big players come in and they make a purchase at a better valuation had they just made an acquisition while that company was at a fair value and operating normally.
Got it. So like if I had X amount of money at some bank and that bank got purchased and the stock at that time was $15, let's say, just making it up out of thin air. Does my stock turn into that new investor stock at their price, or do you get like a share exchange? Do you get a statement? I mean, what happens there?
It really depends on what happens in terms of legal proceedings. Yeah, you could be made whole in terms of your investment, depending on what that actually is whether it's debt or whether it's equity. The equity is unlikely, specifically in this case, to be made whole. So that's really what the process would be. It's going to be hard for anyone that had any real interest within these companies, because it's not nearly what it was a month ago.
Right.
While the company was operating. That's what happens. We're in a capitalist society, which is perfectly well and good. But when you take a risk and it doesn't work out, that's what you're left with.
Got it. Yeah. I mean, I think, with investments, the risk, whether it be an investment property, an investment strategy, that's why I'm always long-term, right? Like everything I like, I like it for, I like to say I like it forever, but I don't. All right, guys, as far as reaching out to you, Mark, got your information up here. What's the best way to contact you?
Call the office, 617-934-1104, or an email, mbossey@bpwealthllc.com. Again, I've been in business 26 years, on my own for 11, right here in Hanover, Mass. We service pretty much anywhere in the U.S. and willing to take a call and chat with anyone at any time and to see if we can help them.
All right. Awesome. All right. Just a couple quick things on, my side to contact Pete and or Nick. Nick is out today, but here's our contact information. Pete Fickeisen, 508-240-4418, NMLS number 1234. Just a quick disclaimer, we're an equal housing opportunity lender. All loans are subject to underwriting approval. Certain restrictions apply. Call for details. Cross Country Mortgage LLC, NMLS number 3029. You can look us up on www.mlsconsumeraccess.org or www.crosscountrymortgage.com, NMLS number 123, NMLS number 998103. All right. Well, hey guys, I'm very thankful that you came on, explain that stuff. I think, again, that whole fear piece, everybody, like, sit back a little bit, watch what's going on. If you have any questions, you can reach out to us about mortgages. You can reach out to, Mark and, Andrew, thank you so much. But, any sort of investment question, anything, we've got a lot of years of experience here, a lot of good, solid advice. And to be honest with you, it costs nothing to have a 5-10 minute conversation, right? So anyways, hope you all have a great St. Patrick's Day tomorrow. Behave yourselves and have a great week and weekend. Thank you so much. Thanks guys for coming on.
Thanks for having me.